What's going on, everybody? Getting a recap here for this afternoon. CPI today, so obviously we see this huge extended move, right? This was that CPI drop. Go to an hourly, you'll see as well. We've left a lot of inefficiency behind in here. So I'll be interested to see if price will want to just return down into that, or if we continue to run into now, right? Really just daily targets at this point. So we have this volume imbalance, daily highs. As we work down on the time frames, you'll see. So we have other areas here. We're looking at on the 4-hour chart. We have 4-hour fair value gap here that we're trying to reach into, right? That's this level. You'll see how we've been hitting off of this. This is a daily volume imbalance. If I go to a daily chart, you'll see that. So right now we've hit that daily volume imbalance. We'll see if we can't get up there, but that's where we've now stalled, right? So daily volume imbalance paired with daily fair value gap here as well. So a lot of daily targets were met. You'll see that we quickly hit that new week opening gap. So we go from new week opening gap up into that daily objective. We'll go straight into the 1 minute because at this point, not much other structure to show, right? We leave behind these huge gaps. We were working within here now during that 9:30 opening. So we engineer the short-term high. We're still expecting price to continue to run through an attack buy side, right? So we're kind of looking for that. We got a new week opening gap here. We have buy side, right? We have buy side targets, and we had that daily objective we were looking for as well. So at 9:30, you'll see how this area here is a 5-minute fair value gap. So now if I go to a 5-minute chart quick, you'll see here that we created this 5-minute fair value gap. Notice how we first create this wick, right? So we first create this wick during CPI, retrace. So if we're going to break above and close above this wick, in my mind, we have no need to return below it, right? We've balanced that out. So if I drag this out, notice how there's no inefficiencies really in here besides this 5-minute. There's a tiny one here under mean threshold or a consequent encroachment of the wick, sorry. So I'm liking this fair value gap here is kind of the one that drew our attention. So as we watch on the 5-minute, we see how we tapped low of it. Once we close back above, we're already comfortable to now use that 5-minute, expect it's going to offer us support, and look for price to continue to deliver higher. Back on the 1 minute now within here, we see how price digs into this 5-minute multiple times, right? But we're actually holding the volume imbalance. So the bodies refuse to even actually get near that 5-minute and close on it, which is a good indication that price is bullish. We're wicking lower, which is fine. We're turning into this inefficiency here. But if you see how the bodies don't even touch that area, that gives you a good indication that once we start to move away, we can trust those setups will hold. So once we break above this high here, notice how we do it. This is the first candle to close above the actual swing point. All this in here, sure, we went above, but notice we're not closing, only wicking. When we get the first true closure above it, we're creating a fair value gap perfectly aligned with that. That there is not random. We've already created an intermediate swing low. We've revisited the 5-minute fair value gap multiple times. So once we break above this high, there's no need to return really below that. And that's why we're okay going ahead and entering now. So we go ahead and enter here on this volume imbalance. First on the volume imbalance, then again, right, as we're kind of sitting here, we close it. We get confirmed to enter on now this new fair value gap. So as we mentioned, once we create intermediate swing low, we break above a high, forming a new discount, we enter there. At that point, we have higher targets, right? This is our final target. So as we form a new discount, the same way that we did it here, right? When we close above, we're closing above this wick with a fair value gap. So now in theory, right, if you were to look at this on a lower time frame, this would be a swing high as well as here. We're closing above both of those, forming a new fair value gap. We would expect that this fair value gap would hold us. We're okay adding a pyramid position here. So we add as price taps into that, partial out of 5 handles, ultimately partial again, new week opening gap. And then our final target here was just this, right? It was this 15-minute swing high. So these 15-minute swing highs, these equal highs, as we go back to the 1-minute chart, that's what this level is here. So we get out at the high. We spoke about how now if price really was bullish and we want to deliver up into this target, we would look for price to continue to just hold the discounts. As we now continue to deliver higher and higher, right? We hold this discount, we get above the new week opening gap, we close above the old high. Notice how we close above it We're now using that as support as well. So we create relative equal highs here first. This is just another liquidity target that we had, but notice how we're engineering short-term buy side underneath, right, higher time frame buy side. So as we come back down into this inversion, this is an inversion because on the way down we create a bearish fair value gap here. Right, I'll show you the 1 minute. So we create a bearish fair value gap. We now close above it. We return into its consequent encroachment. And notice how when we leave it, we're leaving behind discounts. So now as we break structure here at the high, we're breaking structure, right? Notice this is a short-term low. Even though it's one candle, it's a swing low. So we clear a short-term low. We break structure at the high, leaving behind a discount and still having higher objectives to be met. So we can trust when price returns into here, we find support. We break up and through, right? Once again, we're breaking through highs, leaving behind discounts. So we see signatures like this and we're still bullish. We would expect price to hold. So price revisits that, wicks into the fair value gap, but we actually hold the volume imbalance. Notice that. We'd like to see bodies remain above that until ultimately we deliver into our daily target. So we hit our daily consequent encroachment. From there, we're kind of getting into the lunch hour where we start to consolidate around here a little bit, create equal highs that we were going to target later in the afternoon. And we actually start now reversing heading into lunch. So obviously CPI created a huge range higher. During this little move, we're just kind of retracing to pick up some short-term stops that we had left behind. Right, you'll see on the way down how we create breakaway gaps. We really only give you one opportunity here. Right, we can enter there, we can enter on the breaker, high, low, higher, high. We close below it here. So notice how now once we close below that level, right, we close below it here, we then return into its mean threshold beautifully. Break, leaving behind now that fair value gap we saw here, which we can use to just deliver price lower. During lunch now, we start retracing back up into this daily fair value gap. So we really were continuing to reference that daily fair value gap. On the way up, you'll see how we create fair value gaps, right? Bullish structure that we can use now on the way up to attack on this buy side of the curve, right? This is the sell side. We can use the buy side to now attack just liquidity, swing highs, untouched inefficiencies, right? As we continue to stair step our way higher. We now tap that daily fair value gap again, putting in here, I'm going to move this for now, because the first time we tap it, right at 130, we're running a short-term high, we're turning into an inefficiency. We go ahead and create a bullish fair value gap. We then overlap that with a bearish. We would expect that to hold us. Price returns into that bearish and now breaks structure at a low here. We're breaking structure, leaving behind a new fair value gap. So now we can expect that price will want to use this here as resistance and deliver us into the low that was created during lunch. Right, we created this low during lunch. Lunch attacked opposing liquidity. So now heading into the afternoon, we can go ahead and target the lunch low. You see on the way down now, we get a few opportunities, right? Fair value gap here, mitigation block once we break through this candle's low. We could use that here, holds the bodies very nicely. And then once we break from here, we leave that breakaway gap until we deliver into our sell side liquidity, giving you one more opportunity here. All right, so falling short just before reaching that target, returning into that last premium, and now delivering into our actual sell side target. From here though, right, we're still kind of expecting price to continue to run higher. We're not in the market of calling tops. We understand that price, however, has already moved a substantial amount from the opening higher. So if we want to continue higher as we saw here heading into power hour, it makes sense for us to return and pick up opposing liquidity. And that's what this was doing here. So we were engineering sell side. So as the market starts rallying, we can engineer people, right, to start buying, jamming their stops under this low. So when we go down to pick up those stops, we have liquidity that can be engaged. And now price, you see, right, traps these sellers here. Because notice how once we spend time, it's only a few candles. And then we aggressively get back above. We purge and revert that level. Notice how that candle closes right on it. And then from there off to the races. All right, we spend a little bit time in here, but now we really start to push against anyone that had went short. So you see how the market's always engineering liquidity to then attack. Because as much as we were trying to pick up these sell side stops here, after picking these sell stops up, notice how there is now a swing high here. So people that went short, we have buy side resting here. ultimately, right, that's what we get up and into. As we're doing that, we had created this little fair value gap, so we're watching that. We're closing above the high, leaving a discount in place. Price returns into the discount, break structure at this high once again, doing the same thing, right? Breaking structure while leaving behind a fair value gap. Notice how that high is consequent encroachment of the fair value gap, not random. Look at the precision we get here. Break structure. At this point, we're breaking above the daily fair value gap consequent encroachment, leaving behind a 1 minute fair value gap. And look how the 1 minute is aligned perfectly with the daily. So when you see areas like this, when you see the precision that these concepts are overlapping with, that these time frames are overlapping with, that is not random, right? It's pointing that price is already wanting to continue higher. We're forming these discounts so price can return into them before delivering into our objectives. So we had a daily volume imbalance here that we were looking to get met. And you see how price uses the daily fair value gap and then propels us right into that daily volume imbalance, closing right on the high. Ultimately, we do get a few, right, digs up higher, not much higher, but then we revert back underneath that daily volume imbalance. And notice as we're doing that, right, we break underneath it once, we try to get above again, create a failure swing, and now we're breaking underneath it again, creating here a bearish fair value gap. So at this point, we have a bearish fair value gap. We've already been running up higher all day, right? We're heading into the last half hour of the day. We could expect price to return into its range. We have broken structure with a new premium aligned with a daily volume imbalance. You see how everything is just aligning for shorts here, right? So once we hold this, we now break structure and we leave behind the volume imbalance. So our entry during power hour came on this fair or volume imbalance here. So as price is digging back up into this volume imbalance, we'll go ahead and get in or short there, excuse me. And now we're just targeting, right? For us, we had rather, we'll say low hanging fruit targets. We were just trying to get 5 handles. So that aligned with this now fair value gap. We had a swing low here, right? That ended up being our target. Let me move this, sorry. So we had to swing low here, right? And we got out on this candle. So we enter here as this candle pierces into the fair value gap, clearing the low, we get out. Right, we kind of missed all of this move here. Really, we were just returning into equilibrium of this range, returning into, right, inefficiencies that were left behind on the initial leg up. Notice there. But we're fine missing that. Right, we're content with what we got. We can't be upset or greedy about missing moves like this because we know that there will always be more. After hitting now that lowest discount, we spoke about how we would likely now retrace into just equilibrium of this range to close out the day. Right, so we've kind of just been seeking the shoring here. We've picked up both buy side liquidity and sell side liquidity. So now we're just kind of reverting into that range. And we spoke about how that daily fair value gap, we would expect price to kind of just consolidate around that. Right, the main objective here was to accelerate us from CPI, from this new week opening gap, all the way up into this daily fair value gap. And that's why you see price now just consolidate around that area. Right, notice how precisely we're kind of playing around that equilibrium here. So going forward, we will kind of expect, right, we're still not trying to call tops here. We have at this point moved a tremendous amount higher, however. Let me clear all this in here. So I like the idea of potentially, right, if we can get above, oops, sorry. So if we can clear the daily fair value gap, get above it, get above the daily volume imbalance, right? These areas here are now once again higher time frame objectives. So let's go to the 4 hour. It's the 4 hour fair value gap. So honestly, if we can clear these daily areas, then I'd like to see the 4 hour fair value gap. If we do want to give some retracement at this point, I wouldn't want to see the fair value gap form during CPI be broke. Really even the consequent encroachment. If we were to get under that, I would expect that the lows created prior here would be targeted. So for me, wanting to see higher prices, I would want to see this fair value gap hold us. Ideally, this one here paired with the new week opening gap and just continue to deliver higher. But yeah, we'll have to see what we get overnight and see what we can get tomorrow morning as well. So until then, right, the next live stream will be tomorrow morning at 9:25 Eastern. Have a good night, everybody, and we'll talk in the morning. Take care.